I wanted to see if I could scavenge the internet for interviews with professional traders. Traders that actually make a living from trading. Not those TikTokers that say they fly to their home office in a helicopter. Yeah, those guys. I hate those guys. I wanted to find interviews with traders that are making hundreds of millions of dollars from purely just trading. Pick their brains and see what we can learn from them. Could I actually find interviews with the greatest minds in the trading space where they give actual good advice and maybe some tricks you can use right now in your own personal trading? When making this video, it was actually pretty hard to find these interviews. And to top it off, they were all hours long. So I had to go through each and every one and cut the best parts of it. So you, the viewer, don't have to do what I did and can get the most amount of value in the shortest period of time. Quick hint, I found some gems. I compiled 10 different professional traders' interviews. These interviews include absolute gold mines of information, including trading psychology, best times to enter the market, and overall just juicy amounts of information. Let's not waste any time, let's get straight to it. Our very first interview is going to be with this guy, Charlie Burton. His advice? Well, I thought it was a pretty good way to start off the video.
Most people are undercapitalized. They're trading with a few £100 or £1,000 in an account. If you're trying to make even 10% or 5% a month on that, it's boring because it's such a small amount of cash. And for a lot of people, they are undercapitalized.
It's amazing.
Percentage terms, it's brilliant, exactly. And that's why they have to set more realistic expectations. Too many traders out there have unrealistic expectations. They think they're going to turn 100% a month in. I literally had someone email me just a month ago who had £10,000 in an account and he wanted to be making £10,000 a month as an income on that. It's just crazy.
Now, Charlie made some really great points. Like Charlie, I get DMs all the time basically with the general message of this. Dear TradingLab, it's Carl. I have $7 in my trading account. Can you teach me how to turn that $7 into a Lamborghini within 72 hours? Would really appreciate your help. Thanks. Love, Carl. XOXO. Now, don't hate on Carl. There are tons of people out there just like Carl. A lot of traders, when they first start trading, the only thing they're thinking about is the money, which if you only think about the money, you are guaranteed to fail. You need to be thinking about trading in percentage terms. Sure, 10% of $7 is only 70 cents, but as a percentage, 10% is a lot, and you need to think of it as a lot. So, very good point, Charlie. Our next interview is with Al Brooks, and I really like this interview. It kind of shows a different perspective on the market and how you should be viewing it as a beginner trader.
I think anyone starting trading is going to lose money for several years. You know, you're looking for a career that pays a lot of money. Everyone trading wants to make a lot of money. You're competing against extremely smart people, and it's essentially a zero-sum game. So you're trying to take money from really smart people who are trying to take money from you. And when you start out, they're going to win. You're going to lose money. But if you have the discipline and you're careful and you learn how to be objective and you try not to be greedy, use stops, use profit targets, I believe it's something that you can do. But I would start really small, and I would be very humble and work very hard on discipline and expect to lose for several years.
I really like the point he made, where he said trading is basically a game. In order for you to make money, you need to take money from someone else. And if you're literally just starting out, can you really expect you to be better than someone who has years of experience? Probably not. So that's why it's always good to start with a paper trading account and start with fake money. Alright, our next interview is with Larry Williams. He's going to be talking about the best times to enter into the market. But first, let's talk about today's sponsor, Hanker Trade. You need a broker for Forex? I would definitely recommend Hanker Trade, as that's what I personally use myself. They have some of the lowest fees on the market, and that's really saying something. Their spreads go as low as 0.0 pips. And if you're an absolute maniac, you can use up to 500x leverage with them. 500x. They also have negative balance protection, and to top it off, they have a 100% deposit bonus. So if you deposit, say, $500, an additional $500 will be credited to your trading account. How cool is that?
I needed that. That's pretty neat.
If you're interested in that 100% deposit bonus, use the link in my description to get it. All right, let's go to the interview with Larry Williams to see the best times to enter the market.
Stock prices on a daily basis or commodity prices are U-shaped. What do I mean by that? Well, here's an example. In the morning in Los Angeles, there's a lot of traffic on the freeways or in any major city. Then in the afternoon, not much traffic. At the end of the day, there's a lot of traffic again. That's exactly how the markets trade each and every day. There's a lot of volatility early in the morning after a market opens, no volatility, and then at the end of the day we pick up volatility again. So the best breakout trades, the best trend trades will come early in the morning and after that afternoon session is done. That's the sweet spot of the market. I mean, after all, as a short-term trader, you need big movement, and the best time for the large movement to occur is right when the markets open and again shortly before they close. It's U-shaped. Trade these parts of the U, not this part. You become a better day trader.
Larry loves his U's, I'll tell ya. All jokes aside, Larry is spitting straight facts. Every single trading day, the market will have the most amount of volatility when it first opens. Then it'll die during lunch hours, then shoot back up with volatility at market close. Now, if you know anything about trading, volatility is your friend. You don't want to be trading when the market has no volatility and zero movement. So that's a pretty good point, Larry. Our next interview is with Brett Steenbarger, and he's going to be talking about a very common psychological mistake traders make.
I would say two self-destructive behaviors come to mind immediately. The first I would call trading addiction. People can be addicted to trading just like they can be addicted to gambling, and for much of the same reason. Not everyone trades to make money. Some people are trading for thrills and excitement, and those people do get in their own way.
So trading is really a business. People need to think about it as a business. It's not like going to Vegas and sort of, betting the moon at the craps table.
That's a very good point, and much of the money that's made in trading is by being patient and waiting for your edge, waiting for your opportunity. If you have the need for thrills, you won't have that patience. You won't wait for your opportunity, and you get in your own way.
I like this interview. It's showing that trading is not gambling. You shouldn't be going for those huge 100x plays. You need to be thinking of trading as slow, consistent gains. Sure, it doesn't sound as fun, but when you start thinking like this, your trading game changes drastically. Our next speaker is Mark Douglas. He's going to be explaining how to get an edge when trading.
You're going to have to learn an edge. You're going to have to acquire a trading methodology that gives you an edge. I'm defining an edge as that there's a higher probability of one thing happening over another. That's what an edge is. And we're going to learn the nature of probabilities here in a moment. You're going to have a plan on how you utilize that edge, meaning what the risk is, position size, and profit objectives. Then you're going to have to be able to execute. You're going to have to get to the point where you can execute that edge without making errors. For you to be able to execute that edge without making errors, you're going to have to learn how to trade from a carefree state of mind, meaning you're going to have to aspire to the point where you can trade without fear. And to trade without fear, you're going to have to learn how to think in probabilities.
Mark made some really great points. A lot of people overcomplicate trading. To become successful at trading, all you have to do is find one thing that has a higher probability of happening over another thing. Once you find said thing, you write a step-by-step plan to be able to trade around it, meaning you can never break that step-by-step plan. Once you get this machine working, it's all profit from there. Next, we're gonna watch an interview with Brett Steenbarger talking about two specific behaviors that come in the way of your trading.
What are the situations that typically set you off? In trading, most of the problem behaviors are problems as the result of under control or over control. Under controlled behavior would be trading impulsively. I suddenly forget about my position limits and I'm trading much larger size than I should be. I'm suddenly not honoring my stops. I know I shouldn't be adding to a losing position, but I keep finding myself doing that. That's an under-controlled behavior. The opposite would be an over-controlled behavior. I'm so anxious I can't pull the trigger and make the trade. My system told me that I was supposed to go long in the morning, and I just sat there and watched the whole damn thing go up and up and up and up. That's an over-controlled behavior.
Brett is speaking the holy grail here. The market is just a character magnification device. If you're impulsive, it's gonna magnify that. If you're OCD, it's gonna magnify that. If you get mad or angry, it's gonna magnify that. If you've ever watched somebody trade in a demo account, you'll see them making millions of dollars and being so happy. But the moment you let them trade with real money, all hell breaks loose. I truly think trading is 90% psychology, and a lot of new traders unfortunately don't understand that. Next interview is with a woman named Linda. She's gonna be talking about how important trading preparation is.
First off, during the trading day, the number one rule you have to keep in mind is the less amount of decisions that you can make during the trading day. In other words, the more things that you have thought out before that day opens, the better off you are. You don't want to be having to make multiple decisions during the trading day. So very first off the bat, you must have your unit size predetermined. Are you trading 5 lots? Are you trading 10 lots? Are you trading 2 contracts? So forth. I firmly believe in deciding on your unit size and keeping an even bet size, because I don't know in advance which the good trades are and which the bad trades are, and invariably if I start doing a 2 lot where it's scariest, that'll be the winner, and if I do a 10 lot where it looks like it's a slam dunk, that's going to be the loser.
I like Linda. I completely agree with this. You want to be making the least amount of decisions as possible when trading live, because usually if you're making decisions while trading live, oftentimes it's very easy to let your emotions slide in, which obviously we don't want. So if you do all of your preparation before you even enter the trade, you'll have a way higher chance of success, and all you really have to do is just follow your already made plan. Next interview, we have Al Brooks. He's gonna be going over his opinion on market news and if you should even follow it.
To me, news has no benefit to trading. It's entirely baked into the price charts. And if you see someone on the news, that means the producer picked that person to be on the news. And the producer picked that person among all the different choices. The market always has people with opposite opinions. That producer picked a person with one opinion. There's someone equally smart with the absolute opposite opinion. So if I'm watching the news, I'm only getting half the story, and it's going to influence my decision making in a bad way. So to me, the news, it's bad for a trader.
I completely get where Al is coming from. Oftentimes when you even read the news article, it's already too late. And if you've entered or exited because of that news article, you're just reacting to a wave that's already passed. And I really like what he stated here.
To trading, it's entirely baked into the price charts.
Saying the news is already baked into the price charts, meaning you don't even really need to see the news. You can just read the charts itself for a non-biased story. So I'm sure this is a very controversial opinion, but either way, I thought it was a pretty interesting perspective. Next, we're gonna listen to an interview with Bill Ackman. If you don't know, Ackman manages billions of dollars in trades, so he knows what he's talking about. He's gonna be explaining how he thinks you should go about learning investing.
The investing business you can learn by reading. Read everything Warren Buffett's ever written, watch every YouTube video he's ever appeared in. That's a great way to learn about investing. The way to really understand investing is to understand a business, and one of the most important skills you need as an investor is distinguishing between a great business, a good business, a fair business, and a bad business. And one way to get a sense of the quality of a business is go to work for one. So the recommendation I give to people graduating from business schools these days is this is the greatest time in history to work for a startup. There are lots of incredibly interesting businesses being formed. And if you can be one of the early employees, you're going to learn a lot about how a business works, how to make payroll, how to market your product, how to design something. And those skills, I think, are invaluable. First of all, you might even find it really interesting. You might have joined the next Facebook, so that's one thing. Even if the business fails, you'll learn a ton from that. I think that's the best experience you can get, ultimately, to be a good fundamental investor.
It makes sense. If you truly want to learn how investing works, it's best to go from the ground up and go inside businesses and actually see how they work. Even going into bad businesses, that will teach you just as much on what to look for to see if a company is bad. So good advice, Bill. The last interview, I saved the best for last. It's with none other than the king himself, Warren Buffett.
But Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate. And he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing it pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game, and it's a terrible mistake to think you have to have an opinion on everything.
This interview is probably the most important. Like Warren was saying, when trading, you have the biggest advantage in the world, and that advantage is to only swing when you want to swing. And you can wait for the perfect pitch that fits all of your standards for as long as you want. A lot of traders don't use this advantage at all and swing at every single pitch that comes across the plate, even if it's a mediocre pitch. So I really like that point. Patience is a true advantage when it comes to trading. Have you ever thought if hedge funds use technical analysis? Well, like this video, I went through tons of interviews of hedge funds to hear their thoughts on what they think about technical analysis. And it was actually pretty surprising. Thanks for watching, and I'll see you guys next time.